Hello everyone, welcome to the presentation of Monetary Policy of New Zealand. This presentation is done by Robert D'Souza at SEMHRD, required for macroeconomics for managers assignment. Now let's look at what monetary policy is. Monetary policy is the macroeconomic policy laid down by the central bank. It involves management of money supply and interest rate and is the demand side of economic policy used by the government of a country to achieve macroeconomic objectives like inflation, consumption, growth, and liquidity. Now we'll look at the New Zealand economy. New Zealand is a small but a prosperous free market economy. As a country, it is strongly committed towards economic freedom. It has resulted in a policy framework that encourages economic resilience. Open to global trade and foreign investments, the country is financially stable. It's highly dependent on international trades with Australia, USA, and Japan. The Reserve Bank of New Zealand Act 2021 requires that monetary policy promote the prosperity and well-being of New Zealanders and contribute to a sustainable and productive economy. The key characteristics of New Zealand economy are below. Service sector. The service sector is largest sector of the New Zealand economy, accounting for around two-thirds of the GDP. The main industry includes tourism, financial services, and business services. Second will be agriculture, is an important factor of the economy, accounting for around 5% of the GDP. New Zealand is a major exporter of dairy products, meat, wool, and agricultural products. The third will be manufacturing, is relatively small sector of the economy, accounting for around 11% of the GDP. Key manufacturing industries include food processing, machinery, and wood products. New Zealand is highly dependent on international trade, with exports accounting for around 30% of the GDP. Trading partners are Australia, China, USA, and Japan. New Zealand has strongly focused on innovation too, with a growing sector and a number of government initiatives aimed at supporting innovations. Monetary policy of New Zealand is the responsibility of the Reserve Bank of New Zealand, which is tasked with maintaining price stability and supporting economic growth. The key points are below as inflation targeting. The Reserve Bank of New Zealand operates in inflation targeting framework with a target range of 1 to 3% of the consumer price inflation over the median term. The bank aims at to keep the inflation within this range by adjusting the OCR, which is interest rate at which the bank borrows or lends funds to the Reserve Bank of New Zealand. OCR adjustment, the Reserve Bank of New Zealand adjusts the OCR as needed to keep inflation within its target range. When the bank raises the OCR, borrowing becomes more expensive, which tends to reduce demand and slow inflation. Conversely, when the OCR is lowered, borrowing becomes cheaper, which can stimulate demand and boost economic activity. The third key point is Monetary Policy Committee. In 2019, the Reserve Bank of New Zealand established a Monetary Policy Committee, the MPC, to make decisions on monetary policy. The MPC consists of both internal and external members and is responsible for setting the OCR. The fourth key point is communication. The Reserve Bank of New Zealand places a strong emphasis on communication with the public and financial market. The bank publishes regular statements and forecasts, and the governor often guides speeches and media interviews to explain the bank's decision and outlook. The fifth point is other policy tools. In addition to the OCR, the Reserve Bank of New Zealand has other policy tools it can use to influence monetary conditions such as reserve requirements and open market operations. However, the OCR is the bank's primary policy tool. The sixth key point is financial stability. The Reserve Bank of New Zealand also has a mandate to promote financial stability. In practice, this means the bank may use monetary policy to adjust systematic risk and vulnerability in financial system, such as excessive debt or asset price bubbles. Overall, the monetary policy of New Zealand is a transparent and forward-looking approach that emphasizes inflation targeting and effective communication with the public and financial market. Inflation has fluctuated somewhat over the years. It has generally remained within the RBNZ target range. This has helped to provide a stable macroeconomic environment for business and household, which in turn supports investment growth and employment. Let's look at now the New Zealand inflation rate 1987 to 2027. In 1987, you can see it was the highest, about 15%. It has always been below 3% from 1995, and again it's rose in 2023 to 6%, now coming below again in the range of 1 to 3%. The New Zealand ORC from 2016 to 2005. While the interest rates have fluctuated somewhat over the years, they have generally remained relatively stable. This has helped to promote a predictable borrowing and lending environment for households and businesses, which in turn supports investments and economic growth. Overall, the New Zealand's monetary policy has helped to support macroeconomic stability and sustainable economic growth over long term. Thank you for listening.